This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. And as always, welcome to the program. I'm Prashant, with me, my colleagues Sonia and Nigel. Morning, guys.
Hi, good morning. After a long time, we can say that finally the bulls seem to have sort of tightened their grip on the market. It's going to be an interesting week after that, big move that we saw on Friday.
Well, that's right. Friday was a good start to September, right? It appeared the large caps say, why should only the mid caps party? And they joined the party. I mean, big run is what we saw, and we ended strong as well.
Well, large cap bulls strengthened their grip, right? Mid caps and small cap bulls
they have been
were already,
anyway.
It's been a roll. The small cap index, by the way, I was looking at it last week. I think it gained 4.5% 1 week, right? It added 4.5% to what it's already done. So it's been going up for like 25 weeks or something. Wow. So it's just been absolutely crazy. Let's just quickly tell you what you need to know as we begin, a new trading session. So last week was a positive weekly close because of Friday largely. It was a positive weekly close. Friday was a, all gangbusters kind of day. Mid caps, small caps, large caps, everything participated after a long time. So after 5 straight negative closes, weekly closes, we had a positive weekly close, which is a positive indicator. Now, let's rewind back to U.S. markets, right? Now, U.S. markets had an indecisive kind of a close. The S&P, to be fair, was up about 0.18%, but the Nasdaq was actually absolutely flat. The big data point which markets were waiting for was the U.S. jobs number, the monthly jobs number, which basically looked like a soft landing. What I mean by a soft landing, I mean soft landing for the economy, right? Not too hot, not too cold. Inflation looking like it's coming off without too much collateral damage on the economy side. That's soft landing for you, and the data kind of showed that. Unemployment rate, for example, just to kind of give you detail, that rose to 3.8%, which means that there is some slack in the labor market, which is beginning to show up, and average hourly earnings softened. Now, these are the two things which markets watch very carefully. So this is the jobs data. Before that, if you remember, we had the JOLTS employment number in the US, which also was soft. So you put those two things in, together, and the case for a Fed hold later this month has gone up. In all likelihood, unless, of course, we get something else now, perhaps the Fed will be on hold. Views vary, though, I mean, what this really means. And it's interesting the way the market reacted. You would have thought that yields actually cooled off and the dollar perhaps takes a bit of a backseat, but none of that. The US 10-year actually went up about 7. The yield went up 7 basis points. It hit it closed at 4.18%. The dollar index rose to 104.24. So I was also a little perplexed, maybe because, in the very near term, both the dollar and yields had drifted lower after that earlier sharp spike. So there was a bit of a technical correction upwards. But I would be very surprised after the kind of numbers we've seen if these things go in a certain direction. The bigger worry for our market is actually oil. And I was making this point on Thursday and Friday as well. We are almost now we're actually closer to 90, right? We're almost at $88.5 a barrel, which I think is, which bears watching. Never good news when the biggest import goes up and shoots up like oil is doing at this point in time. Now, let's just come back and look at the levels, etc. So on Friday, the Nifty closed marginally above the 20-day moving average, which is at 19,422. We left off at 19,435. So almost there, 10 points basically. But we closed 10 points above the 20-day moving average. So first of all, of course, that is the first marker, the 20-day, which has to be, you stay above it. That's going to be great. But on the way up, the upper end of the falling channel is at 19,460. Again, not very far away, 35 points away, all in close proximity. And then the 61.8% retracement of the entire fall in the Nifty stands at 19,700. These are the three levels. I mean, that's the 19,700 is a more of an aspirational kind of level at this point as we start a new week. But the first two levels, the falling channel and the 20-day, are levels that you need to close above for confidence to come back, that maybe the market can do more. Support comes in at about 19,200. I mean, actually, for so much time now, we've been in a 300-point range, 19,200, 19,230 on the downside, and about 19,550 on the upside. So let's see if you're able to get this out. Now, on the Bank Nifty, we need a close above the 40-day exponential average, which is at 44,513. By the way, on the Bank Nifty also, we closed just around the 20-day moving average on Friday. Above the 40-day exponential on the Bank Nifty, the retracements come. These are the same numbers I've been putting out for the last 3-4 days. So you basically have 44,985 and 45,312. These are retracement levels of the entire fall from the July high to the August low. And of course, support for the Bank Nifty, which is held steady, has been 43,600, was not violated. So that still is pretty good, is a good number to go with. As I was saying, the small caps and mid caps is where the party has been. And it's not a party now, it's a rollicking party. 4.5% last week, just 5 trading sessions. So this is quite incredible. And at the margin, people like Nilesh Shah, who were with us from Kotak, etc., were starting to ask the question, at least right now, that, especially not mid caps so much, but mini caps and small caps, is the market, at least in the near term, overdoing it a little bit? And that's, I think, a question well worth asking. We will talk about this as the day goes on. Sonia.
Absolutely. I think you'll only know in hindsight, right? If the market is overdoing it in the mid caps and small caps. So wait for that fall perhaps. But up until now, things are okay. Overall, the market setup is looking very good, as Prashant was also pointing out. So just a couple of points that I want to add to that. The Nifty on Friday saw its biggest single-day gain in the last 2 months. So it's definitely covered a bit of ground. And post that, we had positive global cues. So you never know if the Nifty actually preempted the positive global cues that we had. Good run on Friday on the Dow Jones. It's been the best week since the month of July. And both FIIs and DIIs bought in the cash markets on Friday. So FIIs bought about 500 crores, DIIs almost 2,300 odd crores. The other positive thing for our markets is that the macro data has been quite supportive. So the 2 data points that I'm tracking, one is the manufacturing PMI that rose to a 3-month high. So clearly manufacturing is picking up, and this entire space, right, whether it's the capital goods names, whether it's infrastructure, all of these stocks have been one of the biggest gainers. The GST collections have risen about 11% as well, at just a little around 1.5 lakh crores, 1.6 lakh crores to be precise. So a couple of things to watch out for. The next big event that globally, market watchers will look at is the US Fed meet. That happens on the 19th and 20th of September. Any indication, of course, of a rate hike, perhaps any indication from the US Fed on the end of the rate hiking cycle is something that will be keenly watched out for as well. Then you have that surprise news that came out, from the Kotak Group. Uday Kotak will be resigning as CEO, and this is 4 months before his term ends. So that was a surprise. And Kotak Mahindra Bank, in any case, has been a big underperformer. So let's see if that overhang continues in the stock. And like, Prashant was also pointing out, a big overhang for our own markets is also what's happening with crude. Now up for 4 straight days at almost $90 a barrel. So that's another thing that perhaps could put the brakes on the market for a bit. But up until then, today looks like it's going to be a strong start. The implied opening is suggesting a 50-point up move.
Well, that's right, Sonia. 2 negatives, actually. One is the Brent crude prices, and the other factor is the monsoons. They are 2 risks. But otherwise, the screen looked very, very good on Friday. It was a good start to the September series. And it seems like the bull said, why should the small caps have all the fun? And that's why you see how the large caps as well did pretty well. We had a good start, but now the bulls will eye an encore today, which will be very, very important. A follow-through session is something on the wish list. Now, besides that, we also saw some short covering on Friday's trading session. Both on the Nifty, the open interest was down by 5%. On the Nifty Bank as well, it was down by close to around 8.5% or thereabouts. What do the FIs do? Well, they continue to remain net long. Not too much movement out there in terms of positioning on index futures, but they're mildly net long. What was heartening, though, is that they wrote puts yet again, and they wrote close to around 3 puts for every 2 calls. In an uptrending market, you want to see put writing, and that's precisely what you saw. 19,300 put, 19,350 put. Between them, it added close to around 90 lakh shares. So it's a good amount of writing, and that's why we saw the PCR has moved to around 1.3 odd. What are the levels you're looking at? Well, we see resistance coming in at around the 19,560 odd mark and 19,620. I'm eyeing both these 2 levels in terms of resistance because there were some signs of writing at around the 19,500 call and the 19,600 call as well. So plugging in the premiums out there, you get the resistance zone. On the downside, we've gone to around the 19,220, 19,230, and we have bounced. So that becomes a crucial support zone. The Nifty Bank, that's going to play a vital role. It did participate in Friday's trading session, but now it has the 50 DMA to contend with. So today on a closing basis, you'd like it to conquer that 50 DMA. It'll brace itself up for a move towards the 45,500 odd. So those are the crucial levels, the 50 and the 100 DMA. The gift Nifty suggesting a positive opening with a gain of close to around 40-50 points odd. Sustaining this gap is going to be very, very important. So we'll have to see a follow-through session today. Just one stock I'm looking at, Geo Financial Services. We know the Nifty 50 has been hosting 51 stocks because of the corporate action out there. Now the circuit has been flexed to around 20% from around 5%. So the probability of hitting a circuit is actually very, very low. So in the next couple of days, you'll see Geo Financial Services that will exit the Nifty and we'll get back to having 50 stocks in the Nifty. So just thought I'll point that out.
Okay, very important observation there. But let's kickstart the show. Of course, Uday Kotak hanging his boots is going to be the topmost, thing to track through the course of the day. So more on that coming up with our experts in a bit. But in the meantime, let's also tell you, give you some cues. Andrew Holland, host of Citi, says that the very tight labour market is likely to keep the wage and price growth running at rates inconsistent with 2% inflation. Friday's jobs report makes a pause in September more likely, but he still expects a 25 basis points rate hike in November, with the Fed officials focused on keeping rates higher for longer.
Okay, we've got another view on equities coming in. This is Rhythm Desai of Morgan Stanley. He says that voting in the world's biggest democratic election will likely commence in April of 2024, with the counting and the release of results to occur in a single day in late May. He's, of course, talking about elections here in India next year. This assumes that the election dates are not advanced, which is a possibility. In their base case, the equity market rises by 10% from now in the run-up to the May 2024 elections. Rhythm says, historically, the Indian market approaches elections with optimism. He expects it to follow a similar pattern this time around as well, that is pricing in a result that favors continuity in the government with the majority.
Okay, let's also get you a handle on what's happening in the money markets this morning. On the rupee, B. Prasanna of ICICI Bank says the economic activity data in the US is pointing towards a gradual softening of the economy. However, the dollar recovered from the initial sell-off post softer jobs data and remains strong. The rupee traded in a narrow range and was supported by the RBI's intervention. Is expected to trade in a range of 82.50 to 83 this week.
On bonds, we've got B. Prasanna saying that global markets witnessed softening buys and yields as growth continued to print below expectations, particularly in the Eurozone. Domestic yields followed suit and eased alongside improvement in systemic liquidity. Beg your pardon. He expects bond market to remain range-bound in the near term in the absence of major triggers. The 10-year benchmark bond yield is seen between 7.1 to 7.2% range.
All right, we got a lot of stock-specific action to track for you. Get to that in just a bit. But for the time being, let's run you through the top 10 list that we're tracking. We're looking at Kotak Mahindra Bank, Hero MotoCorp, Eicher Motors, IDFC First Bank, Five Star Business Finance, MOIL, GMR Power, RVNL, Biocon, and Shilpa Medicare. Well, all 10 of them expected to open in the green.